Thank you, Cynthia. Thank you, Taylor. Thank you, Austin. And thank you, everyone, for being here. Good morning. So, yeah, I'm Raj with WestUrban Capital, and it's my colleague Bradley with WestUrban Capital as well. Let's see how this works here. There we go. So I thought with this, what we could do with this discussion is talk about WestUrban, what we do, how our program works, and then how we've done over the years, and then finish it off. Brad would discuss with you our latest investment opportunity.
Yeah, and I'd also like to note, just as we're starting here, that all the photos that you're going to see in the background here, all the images are buildings that we, WestUrban, built. If any of you have a favorite, you're wondering about what the return was, when it was built, where was it, feel free to ask me after this talk. I'm always happy to talk about it.
Our oracle of knowledge at the firm. So WestUrban, founded in 2017, the two principals, Sean Roy, Terry Hoff. Sean Roy has been in this business for about 20 years. He's built, I think, was it 10,000 plus units of multifamily. Our business is to build multifamily purpose-built rental or apartment buildings. Our footprint is national across the country, so we have projects in British Columbia, Alberta, Manitoba, Ontario, but a very BC-heavy footprint, and with our origin and our head office in Vancouver Island, very heavy in Vancouver Island. And maybe I should talk about that. Our head office is in Campbell River. Brad and I from the Capital office, we're based out of Victoria. Our model is, in a nutshell, we partner with equity investors, and we complete the projects, and then we distribute profits about 50-50, exactly 50-50. And as Cynthia pointed out, 16 projects completed with 11 sold, providing for an average investor project return 52%, annualized 25%. So these are our principles.
That's not how it's supposed to look, but...
No, it has actually a write-up beside it, but the top one is Sean Roy, our CEO, and the bottom picture is Terry Hoff, our COO. And as mentioned, Sean has a lengthy history leading companies building multifamily across Canada. So our investment model. Our investment model is WestUrban will acquire property. We take the property through the entitlement process, so through development permit or rezoning development permit to building permit. We'll secure construction financing, either CMHC insured or conventional, typically 75 to 80, possibly 85% loan to cost. And then we work with investors, such as Integrated Equities, to bring in the rest of the capital. So typically 20-25% of the rest of the capital. And then we go when we build. So we build the projects. Projects typically take 18 to 24 or 22 months to complete. I can also speak to the investment duration. Investment duration is typically 3 to 4 months longer than that, because there's a period of time after completion that you need to lease and then possibly sell or obtain long-term financing. So what we do for every project is, as I mentioned earlier, we find the land. We put that in a project-specific limited partnership. WestUrban is the general partner. We bring in the limited partners as investors. In our model, they get the A units. And then once we build and complete the project, we either go with long-term CMHC financing, really generous 40 to 50-year amortization, and we'll put the mortgage on, and then we'll distribute the rents between ourselves and our investors, or we'll sell to a third party and distribute the profits accordingly.
Yeah, and with regards to profit distribution, I'll quickly comment on what our waterfall looks like. This shows the priority with which proceeds from a sale are paid out. As far as waterfalls go, ours is pretty simplified, pretty standard. The first in the priority is to repay our construction loan. Let's say you were to sell a building for $68 million and you have a $38 million construction loan. before anything happens, you repay that construction loan. Thereafter, we would then repay the base equity of investors, and then normally about a month or two later, that's where, as Raj mentioned, it's 50-50 that we share with WestUrban and with the investor.
So here I'll talk about a few advantages of, is this still working? Investing with WestUrban. Unique, I don't know about unique, but what we're really proud of in our model is we have a very large company. So we have 220 plus employees, and we take the whole development process from land acquisition through to property management. So we have a land acquisition team, folks that are always going around the company looking for future projects to develop in. We have a team dedicated to architecture and design, so leading us through the rezoning, development permit, building permit process. During construction, we manage our own projects. We have ownership interests in a number of key subtrades, so that helps ensure timely access to subtrades and fair pricing. So make sure our project is always going on schedule. And then finally, we have a property management division, so we'll lease our own projects up, and then, as I say, either hold them or look to see what the interest is in the market. So that would be the vertical integration. Track record, we spoke to that earlier. So we've sold 11 buildings. Average project return 52%, annualized 25% return. We changed the colors up here, so you can see that we're moving to a different looking slide. What's maybe unique to our model is the investment risk for the LP investor is truly limited. So in some of these models, limited partners have to come in and take a proportionate share of the bank, the construction financing guarantee, and or limited partnership investors may have to be called on a cash call if there's a cost overrun. Both of those we manage. So we'll take on the construction financing guarantees, and then we'll deal with any potential cost overruns. So it's truly a fixed investment. And then finally, transparent communication. We have pretty detailed quarterly reporting to investors, showing the status of the project, pictures showing the latest update, quarterly financial updates. We have live cameras on our site, so if there is nothing to do during the day, you can always log on and check out how the folks are going on the project. And then finally, Brad and I and then the rest of our WestUrban Capital team, we're always happy to take any questions anytime. Track record, I know I've spoke about this a few times, so maybe you can, basically just a reiteration of all of that. But yeah, we're pretty proud of our track record and hopeful to continue that going forward.
And then moving on to what I'm most excited about, this is our soon to start project in Duncan for which we are raising equity for. Some of you may have a little 2-pager that was made, and this discusses the project. That right there is our beautiful rendering of what it will soon look like. The reason why we're so excited about this build is it's not our first time building in Duncan. This is right in our backyard. It's our 3rd project in Duncan. We just recently, last June, completed a 96-unit building in Duncan. And so we're very familiar with the market. And speaking of the market in Duncan, we're very excited about the vacancy, or rather the lack of vacancy. As Dan, Ryan, and Matt all astutely pointed out throughout their presentations, the amount of immigration coming into Canada is only going up, and with vacancy rates in CMHC at 0.6%, it suggests that this vacancy is going to continue. And getting a little bit more into the numbers with regards to this project, we always rely on third-party appraisals for what we expect the building will be worth upon completion. We don't just give you what we believe in our heart it'll be worth. And what the appraisal showed us was value approximately at $68 million. Meanwhile, our budget that was just finalized about a couple weeks ago, or about 1.5 weeks ago, has a budget of $46 million, given quite a good margin to work with.
Yeah, so you see the capital stack here would be 38 of debt, about 8 million of equity. The return range, based on the appraised value, it would be 59%. Out of conservatism, we probably would say it's a range, so that's why we had the 33 to 59%, depending on your cap rate. Noting our historical is 25, so you should be, if you're in that 20-25, I think we're meeting what we would be, telling you is our guidance based on historical. And then you see the dates. And I think what's really cool about this project is, as Brad pointed out, it's in our backyard, Vancouver Island, Duncan. We've done a number of projects there. This is really well located on the main strip, right behind Highway 1, right behind all the big box stores. It's a really, really good walk store to employment, to all amenities, shopping, etc. So I think it's just a really good project in terms of all of those metrics. And then I think we've come to the end, and happy to take any questions anyone may have.